Hey everyone, imagine this. The AI hype that's been carrying markets for years is about to get a whole lot more selective. And Bitcoin? It might finally step out of the shadow and find its real spot in the next cycle. Top Wall Street legends, BlackRock's Rieder, UBS's Ulrika Hoffman-Burchardi, and Third Point's Daniel Loeb just dropped some serious insights at a Miami conference. They're not saying AI is dead, they're saying the easy money phase is over, and a rotation is coming. If you're holding Bitcoin or watching these markets like a hawk, you need to hear this. Stick around, I'll break it down, what it means for your portfolio, and why Bitcoin could actually win big here. If you're new or want more breakdowns like this on crypto, macro, and smart investing, smash that subscribe button and hit the bell. Let's get into it. So why does this matter right now? We're in early 2026. Markets have been riding this massive AI wave. Think NVIDIA, the Magnificent Seven, all that build-out hype. But these big brains aren't calling the end of AI reassuring. Instead, they're saying the low-hanging fruit is picked. Capital is spreading out from a handful of mega-cap tech stocks into broader, real economy plays. Growth looks steady, maybe even upside surprise, optimistic, but markets are getting tougher. Less buy the dip on AI everything, sarcastic, more pick winners carefully. For Bitcoin, trading around 68,000 lately, serious, this is huge. BTC has often moved like a turbocharged tech proxy in risk-on mode. But as investors diversify away from crowded trades, Bitcoin could attract fresh money as a simple, liquid alternative, not tied to proving AI revenue models or fighting for market share. It's maturing. The shift might highlight its strengths as a diversifier from dollar assets or long-duration growth bets. Let's break down what these three heavy hitters actually said, three core insights. Point 1. Steady growth ahead, but AI is shifting from broad hype to sharp winners, Rieder and Hoffman-Burchardi. BlackRock's Rick Rieder sees U.S. growth surprising to the upside. AI boosts productivity, labor market stays soft enough to tame inflation, rates can ease lower. Tariffs? Quick dismissive. They hit goods, but we're a services economy, less macro damage. Pause. He's already broadening portfolios away from concentrated tech, still like some tech, but the landscape feels totally different. UBS's Ulrika Hoffman-Burchardi agrees macro improves with fiscal stimulus and rate cut room, but after years rewarding AI enablers, now it's winner take most. She's cutting tech and comms overweight and rotating to industrials, electrification, healthcare, basically bits to atoms. Pause. Physical infrastructure for AI's power and build-out. Pause. Mini example. Think how miners, power producers, and equipment makers are suddenly the new hot ticket as AI data centers suck up insane energy. Excited. That's the rotation in action. Pause. Point 2. Markets reward deeper picking and shorting now. Crowded trades are fading. Daniel Loeb from Third Point says we're already seeing it. Rewards for real stock picking, even short selling over just riding megacaps. Analytical. He's eyeing niche plays in Europe, Japan, and Korea, suppliers in the AI supply chain, not just the big names. Pause. U.S. looks solid next 6 months, but longer term? Thoughtful pause. Less certain. Private credit stress in software loans could bring losses, but no systemic blow-up. Reassuring. Mini story. Remember how everyone piled into the same 7 stocks last cycle? Reflective. Loeb saying those days are ending. Alpha comes from digging deeper, not following the herd. Pause. Point 3. Bitcoin's role evolves in this fragmented world. BTC hasn't been the go-to dollar weakness hedge lately. Gold's dominated that. Factual. But as markets fragment, Bitcoin stands out. Simple narrative. No need to prove software profits or win AI races. Emphasis on simple narrative. It thrives on diversification, institutional adoption, and as a liquid alternative when equity themes get picky. Pause. Stronger growth, lower rates, usually lift risk assets like crypto. Less macro fear means BTC leans more on its portfolio utility. Myth 1, quote, AI boom ending means everything crashes. Nope. These pros say AI stays dominant, just harder to play. Rotation, not reversal. Myth 2, Bitcoin only wins on fear and dollar collapse.
dismissive. Wrong lately, gold's taken that crown. But in a maturing cycle with steady growth, BTC can shine as a diversifier, not just a panic buy. Myth 3. You can still win big by blindly buying AI stocks. Sarcastic. Over. Selectivity rules now. Pause. Here are 4 actionable moves you can make right now. Tip 1. Review your portfolio concentration. If you're heavy in a few mega tech names, trim and diversify into AI-enabling physical plays, energy, industrials, electrification. Why? Because that's where the rotation is heading. You could catch the next leg up while reducing risk. Pause. Tip 2. Consider Bitcoin as a 5 to 10% diversifier if it fits your risk. In a world moving away from crowded trades, BTC's simplicity is a strength. Imagine it gaining when AI gets more scrutinized. Position small and hold long-term. Pause. Tip 3. Focus on quality over hype. Whether stocks or crypto, look for durable cash flows, real adoption, not just narratives. This separates winners in tougher markets. Confident. Start scanning for institutional-friendly assets. You'll sleep better. Pause. Tip 4. Stay informed on macro surprises. Watch labor data, rate paths, and AI CapEx updates. Upside growth could boost everything risk on, including BTC. Urgent. Don't get caught flat-footed. Pause. Quick one. Look at how gold outperformed BTC recently during dollar moves. Factual. But as Bitcoin matures with more ETFs and institutions, pros like Rieder, who's long called BTC a gold replacement in functionality, see it gaining ground. Optimistic. In this rotation, BTC doesn't need to beat gold on fear. It just needs to offer uncorrelated upside in a selective market. Pause. Bonus 1. Watch private credit cracks in software. Could create bargains or volatility, but no crash. Cautionary. Bonus 2. International AI suppliers, Japan or Korea, might outperform US megacaps short-term. Intrigued. Bonus 3. Bitcoin's edge? Pause. It's not fighting for AI dominance. It's just Bitcoin. Scarce, liquid, decentralized, slow, powerful. That simplicity wins when complexity hurts. Pause. To wrap it up, steady growth, AI rotation to real winners, tougher but opportunity-rich markets. Summary tone. Bitcoin? It might finally carve its own lane as a mature diversifier. Less momentum chasing, more portfolio staple. Pause. This is the shift smart money is prepping for. Are you? Challenging, motivational pause. If this breakdown helped, drop a like, comment your thoughts, bullish BTC in rotation or sticking with AI, and share with a friend watching these markets. Energetic. Subscribe for more on crypto, macro, Wall Street insights, and actionable strategies. Next up, I'll dive into what rate cuts really mean for BTC in 2026. You won't want to miss it. Thanks for watching. Let's navigate this cycle together. See you in the next one.